Hi, Dave Diegelman, Equity Real Estate. I am here for our October, actually November, but reporting on October's monthly numbers for real estate in the St. George area. And I am from a lovely place in Florida right now. You can hear magpies in the background, so that's what's going on right here. But let's take a look at our market. It's been really hard to predict what's going to be going on with our market because we've had such a long Indian summer that we didn't get the normal amounts of buyers, in my opinion, that come down from up north when it starts getting all crazy up north and inversion and stuff like that. So it's hard to say. Our market is definitely slowing down. It's still a slight seller's market, but that most likely will be changing over the course of November and December, and then hopefully by January and February we will slightly go back into a seller's market. But you will see right here in the red, the number of listings is up. We are just over 1,630 units as of today. I think it was 1,634, it's in the report. And listing prices, these don't really mean much because it's relative to the size of the house and everything like that, but you can see that the active median list price is just around $600,000, just slightly under that, and the average median sold price is just above $500,000. This just means the demand is, closer to that $500,000 marketplace. We have a lot of listings that are listed in the 700 and up marketplace. Absorption rate, I always harp about this. Absorption rate in months, we are up to almost 4 months, which is, again, it's an average market. We've been in an average market now for over 3 months, and I don't think we're going to go back to the 1 and 2 months again. I think if we, in the January, February, March, when we normally have our peak season for southern Utah, I think we'll go back to the 2.5 to 3.5 months, but that's just my guess. Sold to list ratio, you can see that it was at a high of about 101%, and it is down to just above 94%. So what has changed in these periods right here, from right here to right here over the last 2.5 months, is we don't have speculative listings anymore. Well, we're not entirely out of those, but for the most part, most agents are listing things close to where the comps are right now. So if we take the speculative listing prices, which would cut across right around here, we're going to take that out of the equation. Even though it shows that we're down almost 6%, I think we're down around 4% right now of what houses are selling for to the list price when we take out the speculative listings. Days on the market, this is something that we're having less investors, so that's going to show right here. Less investors means that there are more finance deals. Finance deals are typically 30 to 40 days of just escrow, 30 to 35 days actually, but our market times are going above 40 days right now, and I think we're definitely going to see that over the next couple of months as we come into the holiday seasons, that the marketing days is going to go from 40 to 60 or 40 to 50 days, somewhere in that area, which would be a normal December, normal November. That's not unusual at all, but over this last couple of years we've been spoiled by ridiculously fast times. The price volume, here again, it's interesting. We were at $277 million last November, and this October we were at $172 million, so almost $100 million less. This is a decrease in the market. We had kind of a flat line over here where I was calling it pretty similar to what we were the year before, but we're definitely seeing a downward trend in that. And again, I think some of this I attribute anyway towards the Indian summer that we had. I mean, I was driving to a board tour meeting about a week ago, and it was 8:30, quarter to 9 in the morning, and the weather in Salt Lake was at 60 degrees, 59 degrees, and the weather in St. George was at like maybe 61 degrees. So, we don't get as many buyers when we don't have the weather patterns up north kind of going gloomy. The sold listings, we do pay attention to this. We're down in every single category as far as volume is concerned. Well, not every single category, but every category with numbers. I will say that the $750,000 to $1 million range is still holding really strong, and the $1 million to $2 million range is holding strong. I do expect those both to drop. We will see. Pending listings kind of follows what the sold listings are. Active listings are pretty much irrelevant other than we have a huge buildup of inventory, especially in the $500,000 to $700,000 range, $750,000. And then new listings, same thing as active listings. We have a big buildup of the $500,000 to $750,000, which is where our new median price ranges are. So we'll see what happens with that. Outlook. Right now for buyers, it's a great time to buy because there's lots of properties to choose from. You're not competing typically with multiple offers, although one of the last properties we put on the market in Coral Canyon, we literally put it under contract the day that we listed it. But that was a unique situation, and I don't attribute that to really anything other than just the hand of God reaching down and saying, you know what, this one's going to sell. I think it's, for buyers, it's normal for you to be able to find the right price, the right property, but expecting 10 or 20% under market listings, if they're listed at comps or right around comps, I don't think that's realistic in the market in the next 3 months. If we do have a drop in price, we're going to see it in February and March, and it will be a twofold thing. It'll be partly because of if we have the continual rise in interest rates, which still spooks people out of the marketplace, or if we basically just don't have a rebound in our weather, in our weather buying pattern that we have for southern Utah. So I don't anticipate that we're going to go into the type of market that we've had for the last 2 years. I think we're going to stay pretty steady. I think for buyers, if I were a buyer right now, I remember I bought my first home at 7.5% interest and thought I was walking away with a steal because it had come down from 12% interest. So that's a little bit unusual mindset, but people who are thinking that interest rates are going to go back to sub 3%, I don't think that's realistic, because I don't think that that was sustainable. And who knows? I would consider that we're in a recession right now by the numbers that I look at. But I don't think the Fed is going to quite see it that way in their moves. And of course, the bond market follows that. So that's it. If you have anything that you need in real estate to buy or to sell, feel free to give me a call. My personal number is 435-703-4041. God bless you, and have a great Thanksgiving.